Hello, welcome to the European Open briefing for Friday, March the 31st. I'm Rafi Barajan, currency analyst at XM.com, and we're going to be looking at what's happening in the currency markets today. We're seeing major pairs fairly steady this morning ahead of a very busy day for economic data. The dollar is near two-week highs after recovering from that health bill setback at the start of the week. We had some fairly upbeat comments by New York Fed President William Dudley that gave some support to the US dollar. The euro, on the other hand, is not doing as well. It's near two-week lows. It follows disappointing CPI data out of Germany and Spain, as well as Eurozone economic sentiment data yesterday. The yen is broadly stronger today, despite the overall improvement we've seen in risk sentiment during the course of the week. We had solid data out of Japan this morning, so that may be contributing to the yen strength. The Aussie was also boosted by data, this time coming out of China, while the South African rand, in terms of emerging market currencies, is one of the worst performers. It follows the sacking of the country's finance minister by the South African president, and the rand looks set to end the week 8% down against the US dollar. But let's move on now to the dollar index. We've seen it's been steadily rising since late Monday, Tuesday. It's currently, well, it's back above the 100 level, the dollar index. So we of course had on Monday when on last Friday the Republicans pulled the U.S. healthcare bill, and we saw that fall on Monday when trading opened, and the markets have moved on since then. They're hoping that the Trump administration will now focus on tax policies. Plus, we had some good GDP data yesterday. The fourth quarter estimate was revised up from 1.9 to 2.1% on an annualized basis on the back of stronger than expected consumer spending, plus some upbeat comments by William Dudley, he's a close ally of Fed Chair Janet Yellen. He said that risk to the US growth and inflation may be shifting to the upside, and that's fairly hawkish in comparison to his usual language, and he says he's confident about inflation rising to 2%, although the dollar's gains are capped by several risks. We've got President Trump. He's due to meet Chinese president next week, where they will probably discuss trade and exchange rate policies. Donald Trump, of course, has criticized China in the past for unfair trade practices. Also, Trump is due to sign later today executive orders on how to identify trade abuses within the US. So he's trying to find ways to sort out the US's massive trade deficit. And given what the reports will highlight, it may lead to more protectionist policies coming out of the US. And of course, we've got an ongoing investigation into claims that Trump campaign had contact with Russian officials during the election campaign, and so that's a bit of a dark cloud hanging over the Trump's presidency. In terms of dollar-yen pair, the dollar did manage to rise to 1.5-week highs yesterday above 112 level. It's come back a little bit below that level, currently at 111.80. We did have some fairly decent data out of Japan. Core inflation, which excludes fresh food prices, and that's the rate that's targeted by the Bank of Japan, rose to the highest in 2 years at 0.2% year on year. Despite the improving picture, that's still way off the Bank of Japan's 2% target. So it's unlikely the Bank of Japan will be scaling back its monetary quantitative easing program anytime soon. Industrial production in Japan jumped by 2% in February on strong automobile production. Unemployment rate fell to a 22-year low of 2.28%. Despite the fall in the unemployment rate, it's not yet doing much to wage growth in Japan, as consumers are continuing to spend less. Although month-on-month household spending was up on an annual basis, it was down 3.8%, way off estimates of a smaller 1.7% drop. So it's unlikely the Bank of Japan will be doing anything to tighten policy, as they would likely prefer to wait for a stronger wage growth, despite signs of the overall improvement. Looking at the euro now, the euro has been drifting lower this week, and that's mainly on reports that the European Central Bank is not yet ready to start discussing on how to withdraw its massive asset purchase program. We also had weaker than expected inflation data out of Germany and Spain yesterday, as well as disappointing Eurozone economic sentiment survey. Overall, though, we are seeing slightly more upbeat data coming out of the Eurozone, but the fact that inflation isn't picking up perhaps as rapidly as initially expected, we may see the euro pull back, as the European Central Bank is unlikely to act anytime soon. Although today the euro stabilized around 1.0685 after we had better than expected retail sales numbers out of Germany. Quick look at the pound now. The pound, although it did fluctuate on Wednesday after that triggering of the Article 50 by the British Prime Minister Theresa May, it has stabilized since and it's holding comfortably above the 1.24 level. We've got that underlying support coming from the fact that the Bank of England will likely raise rates sooner rather than later, given that inflation is picking up in the UK, given the big drop in the pound after Brexit referendum. We did also have the mortgage lender Nationwide released figures showing that UK house prices fell for the first time since June 2015 in March. So that's why we saw that dip early today in sterling. And in the Australian dollar, that's also been a bit choppy as well this week. It's firmer today after PMI data out of China beat expectations. The manufacturing PMI rose to the highest since April 2012. It rose to 51.8 from 51.6. The non-manufacturing PMI, the services PMI, also did better. It rose from 54.2 to 55.1 in March. That's the best since May 2014, and underlines the fact that Chinese economy, it's basically the growth there appears to be gaining momentum. And before we go, a quick mention about the South African rand, because it's down sharply this week. There's been a conflict between the finance minister and the president over apparently spending levels. That South Africa faces the risk of its credit rating being downgraded to junk due to high government spending. The South African rand is down 1% against the US dollar today. It's on track to end the week 8%. That's a 2-month low, and yeah, there was speculation whether or not the president would sack the finance minister, and that happened this morning in a cabinet reshuffle. Looking at today's economic calendar, we can see the data that's been out already out of Japan. We also had UK consumer confidence data out of GAK that showed the consumer confidence, although it's still in negative territory, was slightly better than expectations. We had retail sales and unemployment data out of Germany, which were also better than expected. Coming up later, though, we will have the final estimate of UK GDP growth. We're going to have flash inflation out of the Eurozone. That's going to be important, given that last month's Eurozone headline inflation rose to 2%, which is at the ECB's target level. And in the US, the personal consumption and spending numbers, as well as the core PCE, that's going to be very important. We also have Chicago PMI and the University of Michigan Consumer Confidence Index. And in terms of Fed speakers, to watch out for, we're going to have Kashkari and Dudley again. We'll be speaking as well. That's it from me. Thank you very much for watching and have a great day.